Welcome back. The spring housing market is heating up, but so are concerns about affordability. With mortgage rates shifting and construction costs still high, many are wondering what should their next move be. And this morning, we welcome real estate agent Shamouk Kishore. He is here to talk about all of it. There's quite a bit to get to. There's a lot of talk right now, though, about oil prices. Makes headlines all the time. How is that impacting the industry right now?
Yeah, so energy costs right now are surging because of the conflict in Iran, and that adjusts inflation expectations. You know, we have the Federal Reserve that has a baseline of 2 to 3 rate cuts this year, but if we see a rise in energy costs, then that kind of changes the plan of what they can do, because now they are stuck between a rock and a hard place where they can cut rates in the face of rising inflation to also save the labor market, where we have unemployment also ticking up, or they combat inflation and start hiking rates, which would come as an unexpected to the entire market. So we have a lot of fluidity in the market right now. We have a new chair coming in, a new Fed chairman coming in May. So it really depends on these next coming weeks on how the conflict surrounds.
And speaking of the conflict, you and I were just talking about this. We just learned this morning this new development. You know, the U.S. gave a proposal for a ceasefire. Iran is countering that now. How is that impacting the rates and what people need to know if they're in the market?
Yeah, so because of the new proposal that happened this morning from Iran, now it's kind of a wait-and-see approach. It just happened this morning, so we don't know what to expect with the current administration. However, if you look at the actions of the administration and our military presence, we have thousands of Marines on the way in the region. We have military assets that come on Friday, which coincide with the deadline the Trump administration gave to the Iran regime. So again, it's kind of a wait-and-see approach. If we see more conflicts, more strikes, then you can expect energy costs to rise and thus mortgage rates to go higher. To give a bit of context, we did see rates just under 8% in October 2023. However, that following spring of 2024, rates did drop to about 6.7%. Today, they're roughly around 6.2%. And even with that being said, pending activity went up 12.5% nationwide. At the end of the day, people want to buy a home. This is the season where we have tax refunds, kids are out of school, buyers are more willing to get into the market, sellers are more willing to list their property on the market. So regardless, seasonality wins in real estate.
What is it that you're telling your clients, though? I mean, because we talk about prices going up for everything, so obviously that means material costs are up as well. You know, what are the conversations that you're having with your clients about what they should be doing now?
I tell my buyers first and foremost, understand your budget. Get your pre-approval, understand if there needs to be changes need to be made, if you need to go higher in price to beat out competition, or if you find a home that's been sitting on the market longer, try to negotiate for those seller credits to see if you can buy your interest rate down. The byproduct, which is a pro when rates are high, is competition is lower, and sellers are more negotiable to offering those credits. So although rates are higher, you can still work a deal out if you have the right real estate agent to get those credits to buy your rate down. And as long as it aligns with your budgeting, it's a win at the end of the day, and then you can start paying down that principal balance.
And you're talking about rates being higher, so I assume that you aren't telling people right now is the time to refinance. Should they just wait?
When it comes to refinancing, I would. There is a lot of movement in the market right now, and when it comes to refinancing, you really want to look at it more from a sniper point of view. You don't want to rush into it. You want to make sure that, because it costs money to refinance, right? And typically in the wintertime, that's when activity dies down. And because of the expectations of the Federal Reserve of this year, I would wait to see how things play out, because at the end of the day, if a deal is struck, then energy costs would be reduced and thus mortgage rates would be reduced, and that baseline of cuts this year would happen. So if you can wait, I would.
Okay, a lot of good advice, and definitely just kind of waiting to see how the market, how it all shakes out. Thanks so much for joining us this morning. We appreciate it. 9:18. I'm sorry, Mike.